I've had a lot of calls and texts the last week or so with clients wondering about the safety of their money in their bank. It's made me realize that a lot of people don't fully understand how a bank operates and how they make their profits. Banks take your deposit and pay you a small amount of interest, therefore your deposit is considered a liability to the bank's balance sheet. To cover that small amount of interest the bank is paying you, they then lend it out or invest it at a higher rate than they would pay the depositor, gaining the spread between the two as their profit margin. Let's just take, for example, deposit $100,000 and the bank holds 10% and then they try to make money on the remaining $90,000. They pay as little as 0.5% on the $100,000, so that's $500 a year in interest they're liable for. But if they can make as little as 2% on the $90,000, they make $1,800 and that's $1,300 on that depositor they've profited. Multiply that on tons of clients and millions in deposits and you understand one way banks make money. Now, according to Bankrate.com, the typical American household has an average of $8,900 in an account at a bank or credit union. This shows you that it takes a large amount of clients and deposits for a bank to be successful. The FDIC insures your deposits up to $250,000. Without getting into a lot of detail, this just means that if the bank were to fail, provided you do not have more than $250,000 in a particular account, you're covered. Of course, there are some caveats to this rule, but in the majority of cases, this is the simple way to understand it. In the case of SVB, most analysts believe that their average deposit holder had $1.1 million invested, and 92% of the bank's deposit accounts had balances over $250,000. And this large amount of average invested meant that it took less deposit holders to withdraw their money when fear of SVB's viability surfaced to negatively impact the bank. Initial reports state that depositors tried to withdraw over $42 million in the first 24 hours. This created a run on the bank for a sudden massive withdrawal that was one of the largest in history and the beginning of the end for SVB. When we circle back and look at an average bank's deposit balance, you realize that the odds of smaller banks experiencing such a large run are extremely low of happening, which means your money's safe and there's no need to panic.